All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Wednesday, everybody. Today's November 20th, 2024. And the top story this morning is Target's earnings, or should I say lack thereof. Man, they were just straight up terrible. And this time yesterday morning, we were talking about Walmart's earnings and how wonderful they were and how the narrative being pushed in the financial press was the strength and resilience of the American consumer in the face of inflation and economic uncertainty and all that other stuff. And I said, hey, guys, I'm not sure that's what's going on. I get that that's going to be the talking point, but I suspect this is just coming at somebody else's expense. And namely, I zeroed in on the fact that Walmart was seeing a lot of growth in upper income consumers, people, who make more than $100,000 shopping at Walmart. The market was capturing market share from other retailers. And then Target comes out this morning and, in my opinion, absolutely confirms that is exactly what's going on. Target's earnings weren't just bad. They were bad any way you look at it. I mean, look, now let's keep in mind here, guys, it was just a few months ago that we heard about Target was slashing prices on thousands of items, right? In order to bring consumers back in. We were going to see some margin compression. Inflation was on its way out, that they were trying to win back market share. Well, listen to these numbers. You tell me if you thought it worked. Earnings per share, $1.85 versus estimates of $2.28. Revenue, $25.23 billion versus an estimate of $25.97 billion. Big miss on top and bottom line. Comparable sales, negative 1.9%, but customer traffic was up 2.4%. So think about that. An increase in traffic, more people coming into the store, but the store's sales are still heading in the wrong direction, and that's not even adjusted for inflation. People just aren't buying. They're going for Target one or two things. They're not even looking at what's nearby. It must be men shopping at Target these days because they're going to the store for what they came for, getting just that and leaving. There's no impulse buying. There's no anything else going on there. So comps look terrible. Digital comps was the one silver lining there. They were up about 10.8%. That's pretty good, but that's also, we're seeing that pretty much with the other retailers as well. Margins are being compressed. Operating income, negative 11.2% year over year. Whoa. Those margins aren't just getting compressed. They're getting clobbered. And on top of that, Target had cut their earnings per share guidance from $9 to $9.70 down to $8.30 to $8.90. So a big cut to their guidance. Look, these numbers were just terrible. And Target's stock at one point this morning was down over 20%. This is the second biggest retailer in the country, and their stock is down 20%. All right. So you got that whole story about Walmart yesterday, and oh my God, it's so great and the strong and healthy consumer. I said, I'm not so sure that's what it's going to be. And then Target comes out and says, no, the consumer is clearly not healthy. He just can't afford to shop at Target, or he won't shop at Target. He's going to Walmart. Also, another example of how Walmart's successful pivot to grocery a few years ago continues to pay dividends to them. I suspect the reason why Walmart has been able to gather market share is because they've focused on food sales and then getting people to impulse buy and do other things while they're at the store. But you know what? This market does not care about Target earnings. They don't care about the consumer. They don't care about the frozen housing market. They don't care about the private equity bubble, the commercial real estate bubble, the electric vehicle bubble. They don't care about any of that. They're too focused on that other bubble, the AI bubble. Little thing happens after the bell today. We get Nvidia earnings. And what are Nvidia earnings going to be? I don't know. Probably fantastic. I mean, look, Super Microcomputer has been reporting amazing earnings. Is anybody surprised? Does anybody believe anything that Super Microcomputer says? And then AMD's chief accounting officer just abruptly resigns effective immediately a few days ago. Anybody surprised that they were reporting some amazing numbers? So Nvidia is probably going to report some amazing numbers today. Now, what's the market expecting? Here's a couple of numbers. $32.9 billion in total revenue is expected. That's the big number to beat there. Within that $32.9 billion data center revenue, that really important data point there, $28.5 billion is expected. They're looking for guidance of $36.8 billion going forward. And the big question here is those Blackwell GPUs, that new product that's coming out. What will that Blackwell, these delays that have already happened, the delay that happened a few months ago that the company initially denied and then confirmed, and then Jensen Huang comes out and he does his best Crazy Eddie impression. He says, demand for Blackwell is insane. And then we find out from the information that there's a new issue with the Blackwell chips, that the servers are overheating, and that Nvidia has asked the server designers, who I guess is Dell and Supermicro, to redesign their server racks so that the chips don't overheat. And it's interesting because both companies were pleased to announce their breakthrough cooling technologies recently. So something is up there. Either Dell and Supermicro's cooling tech isn't as good as their advertising, or maybe there is a problem with these Blackwell GPUs. What will that do to NVIDIA's earnings? What will that do to NVIDIA's guidance? I don't know, but the market is pricing in a huge move based on options trading. The market is calling for an 8% move in NVIDIA stock one way or another today. Guys, this is like a $3.5 trillion company. 8% is a big move in a company that big. So what will Blackwell do? I don't know. On top of that, we've got the European Central Bank is out today. Coincidence? Maybe. Warning that there's a bubble in AI stocks, especially in the United States. Really? On NVIDIA Day? You're going to release that on NVIDIA Day? Okay. In particular, they said investors were demanding a low premium to own shares and bonds while funds had cut cash buffers. In other words, people have no idea WTF they're buying. They have no clue. They're overpaying for shares. They're overpaying for hyped up numbers and stuffed channels and round trip revenues. And the central bank in Europe is saying it's a bubble. Well, don't take your investment advice from central bank randos. Maybe that's what the mainstream media needs to tell us. So let's see what else we got going on today. Ford, just a few moments ago, we got a news release from Ford. They are cutting 14% of their European workforce. That's about 4,000 jobs. Why? Because that other bubble, electric vehicles. They're saying the government has not done enough to support electric vehicle demand. How about you make a product that people want? And then instead of complaining that the government isn't doing enough to help your sales, well, you could actually just be like, hey, we made a cool car and people like it and they want it and they can afford it. Well, more bad news for Germany and the UK, which are the two countries that are probably going to see most of those layoffs. And I would add, guys, Germany's got a big problem. The industrialization that's going on there, the government is collapsing, snap elections on the horizon. Pay attention, guys. Bad things happening in the EV and auto space once again. And we were mentioning a couple of big frauds earlier. Remember Archegos? Remember Bill Huang? Remember that one? What did the guy, he called himself Tiger or something like, I can't remember what they called him. What he had some stupid nickname for himself. He's going to be sentenced today. Now, right now, he's facing up to 21 years in prison, and Bill Huang's attorneys are saying he shouldn't serve any time. Look, this guy's fraud wiped out $10 billion. It led to the collapse of Credit Suisse. Now, I did a little bit of math. The average American in his lifetime, the average American man, will make about $1.85 million in his entire life. All right. So Bill Huang lost $10 billion. That is the combined lifetime earnings of 5,405 people. All right. Almost over 5,400 people. Every dollar they make in their entire life, this guy stole it. What is the appropriate punishment for a crime of that scale? If this guy gets away with no jail time, good God, it's time for pitchforks. I don't know what else to say if that happens. What else we got? Comcast is spinning off their cable networks, or at least that is the rumor this morning. They're looking to sell off CNBC, MSNBC, and E! Entertainment. I don't know. Have you tried getting rid of that Rick Maddow fella? See if maybe that increases the value of those assets? I just throw them out there. You guys do what you want with them. And we got mortgage data this morning. Mortgage rates were up yet again. The Fed is lowering interest rates, and somebody forgot to tell interest rates. Why don't we shrink my big melon of a head and let's see what's going on in the markets this morning. And don't forget that like button and that subscribe button if you're new here, because we do this every day. So come have your coffee with the melon heads as we go through markets. CNN's Fear Greed Index. We haven't looked at this one in a while. It is perfectly up the middle at 50 in neutral territory. And isn't that just appropriate on NVIDIA earnings day? The data point, the one thing that will move this market bigly in one direction or another. This is now bigger than an FOMC. This is bigger than an inflation print. It's bigger than a jobs number. NVIDIA earnings is the single most important market event in the world now. And the Fear Greed Index is perfectly neutral heading into that. But right now, the S&P 500 is essentially unchanged here, up about 2 points or 0.04% higher. The Dow, meanwhile, is also pretty much flat here, up 62 points or 0.14%. We were a little bit higher a few minutes ago. We're giving back some of those gains now. And the NASDAQ is the same, essentially unchanged here, up 4 points or 0.02% higher. So stocks are pretty much flat, although biased to the green side. The U.S. dollar is higher once again, creeping up here, 106.60 for the Dixie. That is up another 40 basis points. That stronger dollar continues to inch higher here. And we've also got higher interest rates. That's not good for metals. We've got the 30-year Treasury, 4.621. That's up 5.5 points. The 10-year, 4.432, up also 5 points. The 2 years at 4.308, up 3.5. And the 1 month is at 4.570, essentially unchanged here. So stronger dollar, higher rates. Gold's actually clinging to some positivity this morning. $2,638 for spot gold this morning. That's up $6.41, about 1/4%. My favorite of the shiny silver, though, not hanging out. They're not faring quite as well. $31.17. That's down a couple of pennies here, 3.5 cents lower, 0.11%. But considering the stronger dollar and the higher rates, I'd say metals are holding up pretty well here. Copper is higher by 0.5%. Platinum is lower by 1/3%, as is palladium. And WTI crude oil is at $69.80 for January futures here. That's up about 57 cents or 0.8%, threatening to reclaim that $70 level here. And we got to talk about Bitcoin this morning. Another new record for Bitcoin, $94,387 and rising this morning. We've taken out a new high. Look, guys, sailors still buying. You got a FOMO rally going on. This thing has an appointment with 100,000. The question is, what happens at 100,000? My guess is it's going to stall there and probably spend a few hundred weeks at that level. I think you've probably got a lot of selling pressure there that's going to prevent it from moving higher. But once we break through that 100,000 level, assuming we do, and I think we probably will, because you still got, almost 10 months left of the rally that typically follows a halving cycle here. So I think Bitcoin's going significantly higher even from here, but it's probably going to stall out at 100. Now, getting us to 100, it's been largely helped by Michael Saylor and co. at MicroStrategy, which, by the way, is trading at a ridiculous premium to its Bitcoin holdings now. But that one's getting even a little bigger here. This one from Zero Hedge this morning, MicroStrategy to sell $2.6 billion worth of notes, upsizing from their previous $1.75 billion sale, and will use the proceeds to buy Bitcoin. Look, MicroStrategy right now is engaged in the infinite money glitch. They borrow money and they use it to buy Bitcoin, or they issue shares and they use it to buy Bitcoin. And that buying of Bitcoin causes Bitcoin's value to go up, which sends MicroStrategy shares higher, which allows MicroStrategy to issue more debt or issue more shares, buy more Bitcoin, rinse, repeat. It's an infinite money glitch. It works until it doesn't. And it's probably going to keep working for a couple of months here. So Bitcoin at 94.5 here on a one-way ticket to 100,000 for the time being. Target shares, meanwhile, they are tumbling. That's to put it mildly, guys. Target earnings were just awful. Target shares tumble after the retailer cuts profit outlook. The company stockpiled merchandise ahead of a U.S. port strike, and the retailer, though, says that the holiday season is off to a strong start. So we're looking forward to good things from the holiday season at Target, apparently. Target shares plunged in early trading Wednesday after the retailer trimmed its full-year earnings outlook, warning that a flat sales quarter and a buildup in inventory has hurt profitability. Company executives said U.S. consumers spent less on non-essential items such as clothes and home products, a weaker third quarter picture than the one provided by Walmart earlier this week. And we've seen that play out, guys. The price of inflation, the rent, the food, the utilities, they're so much higher now. People have less discretionary items, less discretionary income, less extra cash to spend on their wants. They're spending everything on their needs. And so things like home products and clothes just aren't moving at Target. And that is the bread and butter at Target. So they are suffering here. Profit also took a hit after the company stockpiled more products in preparation for the U.S. port strike last month. Holding the additional inventory was more expensive than the company expected, eroding earnings. If that's the case, then that should be a one-off. It'll hit them this quarter, and then it'll rebound next quarter. Weak results at Target underscores how a big part of Walmart's strength is in market share gains, said Vital Knowledge analyst Adam Crisafulli in a note. The consumer may be resilient, but they are still discerning and parsimonious. You misspelled broke there. The poor Target performance probably doesn't bode well for the likes of Kohl's, Dollar General, and Dollar Tree. Target CEO Brian Cornell tried to downplay the negative results in a call with reporters, noting that issues like the port strike were a one-time problem and that the company's early read on holiday sales were positive. He said the company is working to respond to weak demand and offset higher costs, but that it made the right decision to stockpile goods ahead of the port strike just in case it went longer than expected. Now, guys, I would add the port strike thing. Remember, they only suspended it. They're still negotiating. And there was a breakdown in negotiations last week with the longshoremen and the port alliance there. So that port strike issue may come back still. It may still be a thing. We don't regret these actions, Cornell said. Comparable sales grew 0.3% for the quarter in early November, worse than the average estimate compiled by Bloomberg, and a slowdown from the previous quarter. Target now sees earnings per share for the full year in a range of $8.30 to $8.90, down from the previous range of $9 to $9.70. So a big drop in the guidance. At physical locations, comparable sales fell 1.9% during the quarter. That's terrible, guys, because that's not adjusted for inflation. So you can subtract another, 2.5% from that to find out what real sales are doing. Just terrible numbers here. Now, the silver lining here, while comparable digital sales rose nearly 11%, the higher online sales also came with a higher cost of fulfillment, which contributed to a lower operating margin. So lower margins, lower comps, miss on the top and bottom line, lowered guidance, all those things combined. Target stock is down 16% ahead of the opening bell here. At one point this morning, down over 20%, so it's off the lows, but it looks like it's heading lower at the moment here. $129.25 for Target stock, down more than $25. But nobody cares about that, guys. This is the big one here. Nvidia traders brace for potential $300 billion earnings move. That is ridiculous. $300 billion. It's more than the market cap of all but 20 companies in the whole freaking world. And that is the expected move, plus or minus, after hours today, after Nvidia reports earnings. That is how ridiculously big this AI bubble has gotten. With Nvidia due to report an unusually complex quarter as the world's most valuable company, traders are preparing for a potentially mammoth stock swing. Notice they're saying an unusually complex quarter. It's almost like they're not so sure this quarter is going to be awesome. They're calling it complex. I've never seen that language used. They may be trying to soften the blow here. The options implied move for Nvidia shares the day after earnings is about 8% in either direction, according to data compiled by Bloomberg. That would equate to close to a $300 billion swing in market value. That is bigger than all but 25 companies in the S&P 500 index. And according to strategists at Bank of America, the report carries more risk for the benchmark than the next Federal Reserve meeting or inflation data. Nvidia is this market, guys. So goes Nvidia, so goes the Mag 7, so goes the S&P, so goes everything. Now, as the poster child for the artificial intelligence trade, Nvidia has been the biggest event on the earnings calendar for more than a year. But for the chip maker's fiscal third quarter due on Wednesday after the market close, there's more uncertainty than normal about how the results and guidance will play out. That's because there are varying views on Wall Street about what to expect from the company's newest product line, Blackwell. Nvidia has said that the new chips will contribute several $billion in revenue in the fiscal fourth quarter, while CEO Jensen Huang described demand for the chips as insane. Thank you very much, Crazy Eddie. But production delays have made modeling supply a notoriously difficult task even harder. There's a big unknown around Blackwell capacity, said Dan Ice, Chief Investment Officer at Ford Pitt Capital Group. The CEO has established a lot of credibility, with his 2 SEC violations? But the bar is very high, he said, adding that it will likely be challenging for Nvidia to give blowout guidance for the next quarter. So, guys, look, complex, challenging, uncertainty around Blackwell. This is not the typical cheerleading we get here. I'm just noticing a shift in the tone. NVIDIA's earnings are probably going to be amazing because they can report whatever the hell they want. Everybody just blindly accepts it as truth, and it's already grown to ridiculously big numbers. So you might as well report $1 trillion in revenue, and this market will buy it and claim it's real. But right now, Nvidia up a little bit here, up about 0.15%, trading at $147.19 ahead of the opening bell. That's after rising almost 5% yesterday. So we'll see what the earnings bring. One way or another, it's going to be a big move tomorrow. And speaking of the AI bubble, check out the European Central Bank this morning. ECB warns of a bubble in AI stocks as funds deplete cash buffers. A bubble in AI stocks? Say it ain't so, European Central Bank. The ECB warned on Wednesday about a bubble in stocks related to AI, which could burst abruptly if investors' rosy expectations are not met. Combine this story with the sudden shift in sentiment at Bloomberg. What are they worried about here? The warning came as part of the ECB's twice-yearly financial stability review, a laundry list of risks ranging from wars and tariffs to cracks in the plumbing of the banking system. The central bank for the 20 countries said the share of the euro noted that let me start this over. I butchered it here. Wow. The central bank for the 20 countries that share the euro noted the stock market, particularly in the United States, had become increasingly dependent on a handful of companies perceived as the beneficiaries of the AI boom. This concentration among a few large firms, Nvidia, raises concerns over the possibility of an AI-related asset price bubble, the ECB said. Also, in a context of deeply integrated global equity markets, it points to the risk of adverse global spillovers should earnings expectations for these firms be disappointed. It almost sounds like contagion risk from Nvidia earnings there. The ECB noted investors were demanding a low premium to own shares and bonds while funds had cut their cash buffers. That's a fancy way of saying people have no idea what the hell they're buying and they're paying way too much for it. Given relatively low liquid asset holdings and significant liquidity mismatches in some types of open-ended investment funds, cash shortages could result in forced asset sales that could amplify downward asset price adjustments. They're talking about a bubble, and then they're talking about that bubble bursting. So is it just a coincidence that they're talking about that on Nvidia earnings day? I don't know. We'll find out after the bell. And in another bad sign, another bubble, the EV market here, Ford to cut 14% of European jobs, blaming the EV shift and rising competition. Ford said on Wednesday that it would cut around 14% of its European workforce, blaming significant losses in recent years compounded by weak demand for electric vehicles, a lack of government support for the shift to EVs, and rising competition. The U.S. company is the latest automaker after Nissan, Stellantis, and GM to cut costs as the industry struggles with growing competition from Chinese rivals in Europe, waning demand in China, and the challenges of shifting to EVs that remain too expensive for most consumers to buy. Ford said the 4,000 job cuts would be primarily in Germany and the UK. Globally, the layoffs represent about 2.3% of Ford's workforce of 174,000. The measures will be a big blow for Germany in particular, Europe's largest economy and biggest car maker, where Volkswagen is threatening to close factories, slash wages, and cut thousands of jobs to improve its ability to compete. So more problems in the EV space, in the auto space, more layoffs, this time in Europe. Ford stock is down about 0.1% ahead of the open here, trading at $11.04 pre-market. Essentially unchanged, though. Typically, the market likes layoffs. I'm surprised to not see Ford stock moving higher on this news. Anytime we've seen announcements of mass layoffs, the stock has gone higher for that company. So more problems in EVs. And, again, is it just a coincidence that this happens on NVIDIA Day? I don't know. But Archegos' Bill Hwang faces a sentence for crimes that shook Wall Street. Prosecutors are asking Bill Hwang to spend 21 years in prison. He was convicted of cheating major banks that lost $10 billion. We don't need to get too far into this article, guys, but what Bill Hwang did, I talked about it in the opening monologue. The average earnings of a male in America for his entire life is about $1.85 million. That means that this one guy and his crime wiped out the lifetime earnings of over 5,400 people. What is the appropriate punishment for a crime? And this guy's attorneys are asking for no jail time. Can you believe it? He failed a GSIB bank and he stole $10 billion and they're asking for no jail time. So pay attention to this one, guys. I would like to think they're going to lock this guy up and throw away the key. How do you not give the maximum sentence here? How do you not give that? Oh, he seems like he's really sorry, and he picked up trash on the side of the road for a couple of hours on a cool day in the spring. So, yeah, we think he's turned over a new leaf. Let's go easy on him. Is that what the judge is going to do? I hope they lock him up and throw away the key. This guy deserves to die in prison for what he did. Also going on here, Comcast will announce the spinoff of cable networks on Wednesday. Sources say Comcast is moving forward with a spinoff of its cable networks, including CNBC, MSNBC, and E! According to people familiar with the matter, the spinoff is expected to take about a year, the people said. Bravo is not part of the spinoff. Look, whenever they do a spinoff, typically the two child companies combined are worth more than the original parent company. So this is probably good news for Comcast here. That being said, I wonder, does this have something to do? We've seen like at CNN, a lot of layoffs after the election. Does this have something to do with the news networks and their perceived lack of value? Because, well, I don't know. We all know what the state of things was in cable news over the last couple of years. They're looking to sell those assets while they can. We saw it in Disney earnings with the ESPN declines that they're still seeing. Cable is going away. Look, we could say goodbye to cable news, and I think the world would be better for it. So would you miss it? Probably not. Comcast shares are up about 2.4% on this news ahead of the opening bell, $43.35. That's up about $1.03. And we got mortgage data today. The average contract interest rate for a 30-year fixed rate mortgage in the United States rose for a fourth straight week to 6.9%. In the prior week, it was 6.86%. So we got another 4 basis point rise in interest rates. Just a reminder, guys, you see down here, you see September 20th when we got that 6.13, the bottom of this chart. That was 2 days after the Fed lowered interest rates, and interest rates have done nothing but go up ever since. We are now what? Oh, my God, we're almost over 80 points higher now. We're 80 basis points higher than we were when the Fed started cutting. So the Fed has now cut 75 basis points, and the interest rate has risen 80. So the Fed is not in control of what is going on in the mortgage market right now. And speaking of mortgages, we got mortgage applications here. Mortgage applications in the U.S. edged higher by 1.7% for the previous week, ending November 15th. Applications for a loan to refinance a mortgage were 2% higher, while applications to purchase a home were flat, essentially unchanged. Here's the chart here showing a 1.7% increase. Again, guys, this is a week-over-week change that we're looking at here. It's risen 2 weeks in a row now, but both times it was very low single-digit percentage moves, and that's after about 6 weeks of big negative declines. So, the mortgage market, it just remains frozen in place. Home prices need to come down. They need to go lower. They just won't let it happen. The central bankers just won't let them go lower. And I want to say thank you so much to Kevin DeBella. Thank you, Kevin, for supporting the channel. He says, Anecdata, about to spend $800 on struts, coils, and a CV axle for my 12-year-old Honda. Doing what you can to support that aftermarket parts market there on a 12-year-old Honda. Doing it myself to save another $800 on labor. Well, Kevin, first of all, my hat's off to you and your skill set. Look, I am a reasonably mechanically inclined guy. I'm a mechanical engineer by degree. I generally a big fan of DIY. That being said, working on my own car, nope. I mean, I've screwed up enough drywall. I've screwed up enough paint jobs. I've screwed up enough DIY projects to know I am not letting myself anywhere near the engine of my car. I still pay to have it done for me. But okay, spending a lot of money on cars. I mean, this Anecdata, we've seen this. The average age of a vehicle on the road in the U.S. is increasing because new cars are just ridiculously overpriced now. People can't afford them. Even low-end used cars are becoming luxury items here. And so those cars are getting older, and there's also fewer cars on the road. So even though Kevin is spending a lot of money on parts and doing the work himself, the auto parts dealers are not doing so hot because people are cutting down on vehicles. They're going from 2 down to 1 vehicles in the house. There are just fewer cars on the road, and they're getting older. Bad things happening in the auto space. Kevin, good luck, sir, and have fun working on the car. Thank you for supporting the channel. I appreciate that. And Mighty Mike 53, thank you so much, Mike, for the super chat. And I saw this one on Twitter this morning while I was getting ready for the show. This is important inventory data. Good catch, Mike. Ford has 200,000 trucks in their inventory. 5,063 of those are 2023s. All right. Now that's new trucks. All right. Ford has 200,000, Ford's dealers, 200,000 new trucks in inventory. 5,000 of them are 2 years old now. Is the car market about to collapse? Most of the inventory are 2024s, hardly any 2025s, and the 2025s are coming, Mike. That's the other thing. That 200,000 vehicle inventory, a small chunk of it is 23s, mostly 24s, and the 25s are arriving now. So what's going to happen to those 24s? The prices are going to be cut astronomically to make room for the 25s. Even though they're cutting production on the 25s, they're still going to have to cut prices on the 24s to make room for the 25s that they're still making. So we got lower vehicle prices on the horizon. I think we should be seeing lower vehicle prices on the horizon. That latest CPI report, we saw an uptick in used vehicle prices for the first time in a while. That was a little bit of an outlier. It's not a trend yet, but it's worth keeping an eye on. I hope car prices are still heading lower. By the way, I think this was, Mike, correct me if I'm wrong, this was Car Dealership Guy who put this tweet out this morning with this data in it. Car Dealership Guy is an excellent resource for automotive data. If you guys are investing in the auto space, you should be following Car Dealership Guy. And Mike, thank you so much, sir, for supporting the channel. That was an awesome data point. They're swimming in inventory, not just EVs, the big trucks too. That's Ford's bread and butter there. They just made too many of them and people can't afford them. Thanks again, Mike, for supporting the channel. And thank you to Charles G. He says, how much would it hurt the economy and Bitcoin if MicroStrategy goes under? If MicroStrategy were to go under, it would be on the scale of FTX at this point. I mean, right now, I don't know how much of this run-up in Bitcoin's price in the last 3 weeks has been driven by MicroStrategy, but I do know MicroStrategy has been borrowing billions and buying Bitcoin with it during this run-up. So I think it's safe to say this run-up in Bitcoin price would not have happened, or at least would have been much more tame if MicroStrategy wasn't engaged in their infinite money glitch. So, would it hurt the economy? I don't know if it would hurt the economy, but probably not as much. I mean, you got a lot of Bitcoin bros are out there buying Lambos and shit like that. So yeah, it would hurt spending elsewhere. But it would definitely hurt Bitcoin. It would be an FTX level event if MicroStrategy were to go under. And honestly, that's a good candidate, right? We're now in the FOMO part of the Bitcoin halving cycle. We've been here before, like we were in 2021 and 2017 and 2012. All right. It FOMOs for about 18 months after the halving. The halving was in April. That means we've got plenty of time left using prior halving cycles as an example. And there's only ever been 3 or 4 other ones. So, it's not like this is an ironclad trend or anything. But if we follow the pattern of previous halving cycles, this FOMO rally will last for several additional months until there is some high-profile fraud or collapse. And MicroStrategy is a good candidate for that, right? MicroStrategy is borrowing a ton of money and buying an asset, Bitcoin, with it. So if the asset doesn't continue to rally, MicroStrategy won't be able to service that debt cost or pay that debt service cost. So MicroStrategy is a good candidate for the next big crypto pop. And when that happens, Bitcoin price crashes. We enter crypto winter. We wait until the next halving, which would be in 2028. Rinse, repeat the cycle. It's not a matter of if, it's a matter of when. I'm not saying MicroStrategy in particular will be the one. At this point, I'd say they're a leading candidate for it, though. Good thought there, Charles G. I agree with the sentiment. And thank you also to T.A. Chapman, who says, always felt Target was moronic for putting groceries in the back. That's the big difference there, I think. I mean, besides, look, Target has had some PR issues over the years. Namely, last year they had kind of a big one that hurt them. There's a lot of people that swear they'll just never shop at Target ever again because of that. But on top of that, I think you're right. I think the grocery being all the way in the back, it's obvious to me at this point, even though I personally don't buy my groceries at Walmart because my local Walmart skeeves me out. When I walk in there, I see moldy produce. It's just not very well run. But I've heard anecdotes from other people who say their Walmart is pristine in the grocery section. But in Walmart, the grocery pivot has brought people in, and some of those people are impulse buying while they're there. They're spending money on other things. It has clearly been a winning strategy for Walmart. Target did not do this, and they're paying the price for it. Walmart's just gobbling up market share. I mean, the earnings don't lie there. So I agree with you, T.A. Chapman. Thank you very much, sir, for the super chat and the support of the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Shout out to my Patreon supporters on YouTube and not on YouTube, Patreon supporters on Patreon and Magnanimous Melonheads on YouTube. Thank you guys for supporting the channel. Looking forward to talking to you guys at 2 p.m. Eastern time today for our weekly get-together on Zoom. Links down below to all that stuff, should you feel so inclined. Thank you guys for the super chats and supporting the channel. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.